Hello everyone, welcome back. We're here. We're out of COVID, but we're into something else. So many concerns jointly are all around us. Surging inflation, rising interest rates, continued supply chain disruptions, soaring energy costs, rising raw material prices. It's been really tough. But the economy has held up with tremendous resilience, the will and strength of the consumer in its desire to live it up, go out, travel, restore and exercise, return to a proper lifestyle, has made this possible. The question is though, how long will this last? And if it ends, where are we heading to? To understand where we're going, we could perhaps observe movements in the financial markets, which often anticipate economic trends. But to be truthful and fully grasp the direction we're heading to, we need to decipher the main roots of our current situation: war, the Russian-Ukrainian conflict, end-of-cycle economics, tighter monetary policy and lower growth, and the backlash of COVID. In 2022, for manufacturing businesses, the three above have caused an increase in selling prices, coupled with a contraction in volume. Prices in 2023, forecasted to decline, will not compensate a probable decline in units. So differently from 2022, there may be a reduction in revenue across the board up until the first half of 2023. This note will not regard the services industry, more resilient and not impacted from the effects outlined above, such as business services, education, IT, and healthcare. With reference to 2022 M&A activity, at the beginning of the year we had a seller's market, with many buyers stacked with cash and few sellers having the effect of raising valuations. In the second half of the year, the market inverted to a buyer's market, with few buyers and many interesting assets potentially available. This caused buyers and sellers' expectations to divert, leading to strong contraction in M&A activity both in value and volume terms, thus leading to slowing downward pressure on valuations. Such period, with essentially investors on the sidelines on wait-and-see mode, not trusting to sail through uncertainty, has brought acquisitions in Italy to decline significantly compared to recent past. Within this context, now would probably be the right time to snatch up assets which would either never come to the market or be the target of many competing buyers. If valuations are fair and the true potential of these assets is priced in, given the current temporary nature of the downfall, courageous investors will steal the show and acquire prized assets. 2022 saw CrossCourt Capital visit a significant number of new companies, 56, of which 24 with an EBITDA in excess of euro 15 million. We brought our client investors to 26 of these newly visited companies and submitted 8 non-binding offers yielding 4 exclusivities. We completed a single micro-transaction in the asset management industry. But given the tough market conditions just analyzed, we remain confident for the future, knowing that we have sowed the seeds necessary to drive the pipeline, which is currently more buoyant compared to past years. In addition, 2022 saw us working on 4 corporate finance transactions, 2 sell-side assignments, a fundraising in the luxury industry, and a private placement in the telemarketing lead generation business, and 2 buy-side assignments, one in artificial intelligence and the other in water flow components for heating and plumbing. As always, you can check out our 2022 origination and execution statistics on our website. After a tough first half, we believe that 2023 will turn for the better. Existing significant cash on the sidelines and dry powder will contribute. Standby mode will end and declining valuations will drive unwinding of capital. Proprietary deals will anticipate structured sale processes, being linked to less competitiveness and thus having the nature of lower valuations. Confidentiality by sellers will also be sought after, again driving proprietary transactions, as a failure in this phase could prejudice future divestment of the asset and valuation upside opportunities. From an industry point of view, we're witnessing significant interest from investors in healthcare, mainly hospitals, home care services and telemedicine, education, business services, and ITC. In 2023, we hope to continue delivering idea development, sourcing, and origination services with an increased pace and volume as we're bulking up the team. On this positive note, we wish you and your families joy, peace, and happiness for the forthcoming new year. Happy New Year!